I think that we could see profit taking occur at any point. Realize we've got gold above $2,000, just below it in the spot market. And that is those premiums continuing to remain in gold pricing. Well, I think it's the shorter term traders pulling profit, to be honest. On the occasions previous to this occasion, there weren't so many multiple factors in play. Right now, we have geopolitical unrest in Ukraine and in the Middle East. On top of that, we have the Federal Reserve's expectation that they might in fact have concluded with rate hikes.
In today's episode, Gary Wagner, editor of thegoldforecast.com, contends that the current market dynamics are unlike anything seen before. Wagner attributes the recent surge in the gold market to a perfect storm of geopolitical unrest in Ukraine and the Middle East, coupled with the Federal Reserve carefully navigating interest rate decisions. Delving into the Federal Reserve's potential for one more rate hike, Wagner acknowledges the decreased probability, but emphasizes the lingering possibility, tethered to inflation data. His insights underscore the intricate dance between national debt, interest rates, and gold's role as a safe haven in times of economic uncertainty. As markets brace for further shifts, Wagner's analysis provides a nuanced view of the forces driving gold's remarkable ascent, creating a narrative that transcends the traditional confines of financial discourse. Like, subscribe, and turn on notifications to get more videos like this. And check our pinned comment for some very special sign-up bonuses, as Bybit is giving you $20 for creating an account in their platform so you can start trading crypto today. Let's get into the video.
And then we went into what I'm calling the October rally, which is when there was a conflict in the Middle East, taking gold from about 1840 up to $2,019 before retracing slightly. Now it's back up today over $2,000. Even though it is down about $8, it's still sitting at roughly $2,012. So I'm extremely bullish. We could get any kind of a pullback in terms of profit taking, but overall, I believe that 2000 will become the new level of support. I want to see that remain that way because so many times we've seen it break above that only to break back below. But I think that that could be a good area of support. And if in fact we do see it move higher, I expect it to challenge about 2000. That when these events initially occur, you get a knee-jerk reaction in which gold will move up substantially. We got that when Russia attacked Ukraine. We got that during the Israeli conflict that's currently underway. And then after a while, it seems as though market sentiment says, well, we've added the premium, and they begin to discount any news that's coming out from that geopolitical hotspot. So that's why we saw gold move as high as 2019 and then run back down, but yet the Middle East tensions were still fully in place. It seems as though market participants will want to shift their focus. In the case of what we saw, the shift in focus was to the Federal Reserve and whether they'd raise rates or whether they'd continue to pause. Once it became evident that a pause or rate hike conclusion is most likely, then we saw them really focusing on that because the Ukraine war is still fully in play, but they have added a premium to that. Realize we've got gold above $2,000, just below it in the spot market. And that is those premiums continuing to remain in gold pricing. I think that we could see profit taking occur at any point.
Now, Wagner explains what he expects to happen in the short term for gold prices.
Especially on Thanksgiving, I get concerned because a couple of years back, we saw some traders in London take advantage of the long Thanksgiving Day holiday. And when the Americans were away and stuff with Turkey and the Canadians were away, so to speak, they really trashed the market, bringing it down substantially. But overall, I'm exceedingly bullish. I would look at any dip to be shallow and short term. I would look for 2000 to become support, major support at 1960. In terms of levels of resistance, it will have to challenge 2040. If it goes beyond, and that's a double top, goes beyond that, 2080, and then the all-time record high is touching $2,100 per ounce. So I would think that it should go through at least one, if not challenge two of those levels, meaning 2080, before traders step in to pull profits.
Now, Wagner gives an in-depth explanation of the possibility of a rate hike in December by the Federal Reserve.
About yesterday, I believe it was at around a 94% probability, according to the CME's FedWatch tool. The reason I say that is when Fed Speak the other week came out, they talked about wanting to maintain this level, but then they buffered it by saying if the data suggests that inflation moves off of the current trajectory, that they wouldn't hesitate to pull the trigger. While I don't expect a rate hike in December, they've left open the possibility in that. Consider that right after the March rate hike in 2022 in June, we had inflation at 9.1. The last reading was 3.7. They have definitely moved the needle. We're also getting economic reports that are suggesting a contraction in the United States economy. That's what the Federal Reserve is after by raising rates. We know that home sales are dramatically lower due to the excessively different rates in mortgages, going from about, at the low end, 3% when the Fed was at 0 to about 7 or 8%, and Treasury yields moving higher. So that is what I'm basing my commentary as well as analysis on in terms of the fundamental factors behind the most recent move.
Federal Reserve Chair Jerome Powell indicated on Thursday that the central bank is adopting a cautious approach regarding further increases in its benchmark interest rate, emphasizing the ongoing alleviation of inflationary pressures. Speaking during a panel discussion at the International Monetary Fund, Powell acknowledged the Fed's uncertainty about whether the current benchmark rate is sufficiently elevated to consistently bring inflation down to the desired 2% target. While not ruling out the possibility of another rate hike, Powell stressed the importance of appropriateness in timing, asserting that the Fed will act if necessary. Powell underscored the delicate balance the Fed faces, expressing concerns about both raising rates too high, potentially disrupting the economy, and not raising them high enough, risking persistent or worsening inflation. The cautious sentiment was encapsulated in Powell's assurance that the Fed will proceed with careful consideration, reflecting an approach marked by vigilant monitoring rather than a predisposition toward immediate rate hikes. Now, we'll show you the rest of the interview with Gary. Kindly hit the subscribe button, smash the like button, and share this video with someone you love. Everything helps with the algorithm, and you're helping us a lot with your support. Let's get into the video.
The last time Powell spoke, he kind of spoke through both sides of his mouth, saying that I really am hoping that we don't raise interest rates again. And then he buffered that by saying, but if the data suggests that it's necessary, I won't hesitate to pull the trigger. Of course, you have multiple Fed members, both dovish and hawkish, some recommending that they do one more rate hike, others saying that enough is enough and we've gone high enough. I mean, when we think about it, the Federal Reserve in March 2022 had their Fed funds rate between 0.25%. It's now 5.25% to 5.5%. So they've been exceedingly aggressive. The ECB has already said that they're done with rate hikes and are also they are beginning to talk about rate cuts in April of next year. And so that component has really taken some strength into gold and allowed it to maintain above the price point. And that's why I think that breaking above 2000 now, because of the geopolitical concerns, as well as the fact that the Federal Reserve If they do raise rates, it might only be one more at 0.25%, and they could in fact be done with that cycle. Bodes well for gold, at least holding above 2,000 and maybe challenging some of the higher levels of technical resistance.
What do you think of today's show? Is Gary spot on with the possibility of a new rates hike for the dollar? Will short-term traders take advantage of the run-up in gold prices to take some profits? Let us know in the comment section down below what your gold price prediction is for the end of the year. And if you expect a massive bull run for precious metals in 2024. Thank you for watching the video to the end. Hit the like button to let us know you've enjoyed the video. And if you want to add crypto exposure to your portfolio, don't miss out on our sign-up bonuses, as they won't last forever. Thank you so much for your support, and I see you on the next one.